This is Peter Arender. I'm Chief Investment Officer at Fortress Fund Managers. Well, this week marked the end of the third quarter. It also at Fortress marks the end of our fiscal year. Year to date, the Caribbean Growth Fund up about 13%, and the one-year number on the same growth fund up about 27%. So it's been okay. This week was a bit choppy, though, and I'll touch on some of the reasons for that. Carib Growth Fund would have been down about 1% this week. Some of the choppiness came from the U.S. One major issue was negotiations over the government debt ceiling, which sounds pretty boring, and it is, except for the central role of U.S. Treasury Bonds to financial markets. So this type of debt ceiling back and forth suggests that there may be a chance that the U.S. government has a disruption in their ability to pay on their bonds. And that sort of tends to ripple through all financial markets. So some jitters there. The second source of volatility this week came from the Federal Reserve, the Fed suggesting that they're getting closer to tapering quantitative easing. What that means is they're going to be reducing the number of bonds they buy and reducing, therefore, the amount of support they're providing to all financial markets. So really, more things just getting back to normal as far as the Fed is concerned. Now, normal, let's not forget, means some moderation in goods demand. And we're starting to see some of that ripple through as well in terms of supply disruptions. We saw stories this week about energy shortages in Europe. We know that shipping is still very constrained. And I think it's fair to point out that this too shall pass. And after a shortage, often comes glut. So we will watch to see what happens with some of those areas. I think services are the next part of the economy to recover, and will have to be at the expense of some of the goods producing areas. Safe to say in terms of equities, the tide that has been lifting all boats is likely over. We here at Fortress continue to be very selective in our investments. We think there's still more air to come out of some of the higher valued stocks, especially in the US. But as more things get normal, we think the kind of high quality, well valued stocks where we focus our portfolios still have very, very good prospects to come. That's it from here.